Last month I made over $25,000 trading this very simple approach, and this month, only 1 week into March, I'm already up over $12,000, repeating the system that I'm about to teach to you. Now this is a question I get asked quite often by my mentees and from my audience, is how to differentiate the difference between internal range structure and external range structure, and what are the things to look for and how to act or behave differently in those different market conditions, and what kind of things to look for before you actually get involved in trades. So I'm going to be drawing on the chart right now some examples. So first of all, we're going to start off with internal structure. Now this is going to be covered on the 4-hour time frame, which is the time frame that I use to build my trade idea. If you're here for the first time, welcome to my content, and I typically trade 1 to 2 indices and 2 to 3 time frames, but the most time I spend is on the 4-hour chart. So that's where my structure lies, on the 4-hour. And I'm going to be drawing on some structure. If you're new to structure, not too sure what structure even is, don't worry, I'll try and make this as simple as possible. If you've been trading for 5, 6, 7 years and you're doing the break-even dance, or you're not quite consistently profitable yet, this is also going to help you as well. So 4-hour internal structure is when we have a trending market, higher highs and higher lows, and then we see a shift to the downside where the 4-hour begins to print lower lows and lower highs, right? Now, if you haven't already watched my video from last week, I suggest you do that because it covers a trending market, right? But for now, let's assume that the higher time frame macro sentiment of this asset is a bullish market. So overall, if you zoomed out, or if you went from a 4-hour time frame to a daily time frame, just went up one time frame, we would be assuming that we are in a bullish market. Now the 4-hour has now shifted bearish, right? So what I normally do is I use a Ganbox range, and I would cover the most recent range high, and we can see that if we break the low here, it doesn't really matter, but if we get 1 and 2 breaks lower, that's confirmation for me that that time frame has shifted bearish. Now this for me is internal structure, because I'm always going to be looking for buys in a bullish market, right? You can look for counter trend sells, you know, positions to the downside, but that's more advanced stuff and you don't actually need to do that. So what do we need to be doing in this internal structure before we start getting involved in buys again? So if the 4-hour is printing lower lows and lower highs,